Good morning. Today is Friday, June 12th, 2020. Today we're going to look at the markets. If you haven't looked at DayTradeToWin.com, if you're new to trading, please take a look at the wealth of information that exists here on DayTradeToWin.com. We have a Getting Started page right here. You can come here to Get Started guide. It's very important. Try not to move your stops and think it's going to turn around any minute because that's a problem. All right. Now, when you look at news events, I have here the news indicator listed here on my chart. And the news indicator allows me to know when we have some type of event that's scheduled, like an unemployment report or the FOMC, the manufacturing index, the non-manufacturing index. So it's listed as a red star, and you can customize it really any way that you want with low priority, high priority, European markets. So it's very versatile. Just focus on the US markets. I'm going to show it to you here. Just focus on the US only markets. And I have here high impact as orange or red on a black chart. So that way I know that, and you can copy these settings if you'd like. All right. All right, excellent, very good. Any other questions so far? So we have a long trade here. We have a short trade here, nothing on the second chart. I'm only showing you the E-mini S&P as well, but there are traders who are doing the oil. There are traders who are doing the NASDAQ. There are traders that are using this under different markets and different conditions. Actually, with their own trading, they're looking at the trade scalper to say, I'm going long or short because there's a scalp signal, but also because their own signals are indicating to be a buyer or to be a seller. All right, very good. Very good. That's good. Okay, so the next thing we're going to talk about here is how many trades a day should you take? Well, we have a lot of signals, obviously. And when you have a lot of signals that are thrown at you, you have this tendency, traders do, to just keep on trading and trading and trading. I have a different perspective on the situation. I think that if the opportunity exists, great, take it. But if the market is into the afternoon and you've already had, let's say, 10 trades for the day, I think that's enough. And I really think that it should be an opportunity for you to stop if you're ahead, because it's not necessarily the more trades that you take, it's the quality of the trade. So you can take 2 or 3 trades and be finished and be done and move on with your day, instead of sitting here glued to the screen and just taking trade after trade after trade. That I think is not going to help you. Joseph says here, can you show the rollover function again? I got toward the end of it. Yep, sure. So I had purposely the June contract up and running, Joseph. And so what you do, let me just go back to the control center. The control center is where you take a look at all of the, let's take a look here, right here. So the control center right here is where you take a look at adding a chart, right? You want to add a new chart, you want to add a Superdome, you want to do a time and sales window, and so on. But we're going to come here under Tools and Database Management. And I have a video on this as well. If you haven't seen it, you can visit the DayTradeToWin.com and visit the blog, or visit the videos page or the YouTube channel, DayTradeToWin. And over here in Database Management, right now there's nothing here that's listed that needs to be rolled over. But previously, and you can watch the video, this is being recorded, Joseph, there was a list here of markets, NASDAQ, Dow, typically the currencies, futures, as well as the index futures. And this button here would be active. It wouldn't be grayed out. And all you have to do is click rollover. And once you do that, it's done. There's nothing else you have to do. The charts will automatically populate with the new contract, which is September. You don't have to close the current chart or change this at all. It'll automatically do it for you. And then you just click X, and that's it. Joseph, let me know if you're okay with that. Okay, so Poya has another question here, which is what's the difference between the tick chart and the signals, and which one is better for receiving the signal faster? Well, the smaller the time frame, let me just forward this to everyone. The smaller the time frame, the faster you'll be able to see the signal and get into the signal. So if you use, for example, a 1 minute chart, the signal only appears after the 1 minute candle has closed. When you look at a second chart, the signal based on the algorithm will only appear after this candle, which is based off of 2 seconds, will appear. So the difference is that you're getting in faster than the 1 minute chart. So that's one side of the coin. The other side of the coin is that with a 1 minute chart, you have more time to prepare when you see a signal to then place the trade. So even though the market is pretty volatile, I don't want to rush into it. I don't want to see a signal and then jump into it with a bad fill. What I prefer to do is see the signal, go to my dome here, place the trade. So after you see the signal, you place it to go long or you place it to go short, right?
Order filled.
So you're actually waiting for the signal to occur where it doesn't impede the way that you're entering by rushing into it. So in my opinion, it's always best to get in, you see a signal, there's no slippage or maybe within a tick of slippage. So the 1 minute chart is better when the market is more volatile because you have time to see it and you're not rushing into it. When the market is normal or slower, I think a range chart, so for example, here's the range chart here, right? So the short signal here on the range chart that happened earlier occurred here, and you have time to get in on within the next few seconds here or even here to jump in short. And the same thing here is a long trade right here. If this long trade appears right over here, and let me see if I can move this out of the way. Actually, I think I may have the indicator twice, so I'm just going to remove it. It's unnecessary to have twice, just duplicated. So what we're going to do is when this appears, by the time you're able to even get to the Superdome or to the chart trader, the price may be here. So I don't want to enter here. I want to enter as close as possible to this price. So when the market is very fast and it just starts to move and it triggers and it just takes off like a rocket, don't chase it. If you're able to get in when it comes back to this price or within a tick or two, fantastic. Get the price. And the same thing that happened here, you're able to get the entry, but don't push it or don't force it. And even though in this example, the market just kept on going and going and going and going, I don't know this is going to occur, right? And the same thing here, when this triggered to go short, I have no idea that this is going to occur as you see it, right? The market is going to go short and I'm able to make a profit target out of this situation, but I have no idea that all of this is going to occur. So I have to plan for entering at this price or better or within a tick, and then only taking it before trailing a stop and before doing all those things. I have to only consider a point or 2 points, and I don't want to believe that this is going to occur as you see it. So that's how a range chart, a minute chart, and a second chart would work. The faster and the smaller the second or the tick, the sooner these signals appear, but just be patient with it. Are you using the September contract? Just make sure you're using the September contract. And if you need to, sometimes you have to do a reload historical data by right-clicking on the chart and choosing reload historical data right over here, just to make sure that the data is new and is accurate. All right, let's talk about something else when it comes to trading days and how price action works. This may help you when you're looking at the market and trying to understand what I can expect day after day after day. So markets work in cycles. So if you are in a slow cycle, I would expect a few days of the same environment where the market is slow or the market is choppy or the market has a whipsaw, or at the same event, when there's a large trend in the market's just trending and trending and trending, you can expect 3 or 4 days of the same. So even though every day is different and every day has different opportunities, what doesn't change are the cycles. You have a grouping of days that occur that are highly volatile or slow or choppy, and you have a grouping of days that are um, range bound. We have a signal here to go short. I wanted to show you this here. To go short. So this short here at 30.60 quarter here, the market went down, and then you have a long trade here. Let me just try to push this like this. So we have a trade here to go short. As soon as this short signal appeared, the market reversed and went up. A little hard to get in here on the range chart on the short, and the same thing here on the long. As soon as this long appeared, you want to go long. Wait for the market to come back. So you see how the market gave this long position, stopped, came back to 30.62 quarter. Let me try to do this here. So this, to me, was very difficult to get in because it happened too fast. But this, you have a little bit more time and patience to see the signal, wait for it to move, get in. I think 30.62 quarter, 30.6250, 30.6275. Yep, right there. So this is uh, an, a normal trade scalper signal where it pops and you don't get in right away. You're able to get filled. This here happened so fast, I don't think anybody was able to get this short signal. And you have a stop in case you were trying to get filled short. You have to get stopped out on this trade. You have an opportunity here to get back in to recover on this long. Okay, let's take a look at the second chart. The second chart here actually gave us a little bit more time to get in to a short, because at the end of 2 seconds, this candle closes. The next 2 seconds, you get filled here or here, and then as soon as you get filled, because this is definitely a good fill, the market turned around and went up. You have your stop. You have to get out of the trade. So in this case, this trade failed. In this case, the trade was okay to go long. Here on the 1 minute chart, nothing. There's no trade long or short here on the 1 minute chart. Anyone have any questions on that? So this is just the E-mini S&P. I know some of you are asking about the NASDAQ and about currencies, but this is just showing you the E-mini S&P. Okay, Atlas line, sure. So let me show you the Atlas line. Let me just bring up the chart. So this is the trade scalper. I'll keep this up to see if we have more signals so you can see the signals that appear. Okay, so this is, I'm trying not to cover everything up, but show you as much as possible within the one screen that I'm sharing. So on the Atlas line, so far all the signals are long, and being that all the signals are long, I would probably expect that the trade scalper signals that are long are probably better than the short ones. So the Atlas line, I'm just using a 1 minute chart here on the Atlas line because the ATR, as you can see, is pretty high, about 4 points. So the signal to go long, 30.6450. Another signal to go long, just remove this out of the way, at 30.62. Another signal to go long at 30.62. So everything is indicating to buy the market, to go long. And a lot of traders use the Atlas line with the trade scalper because they, even though they're different, you can use the Atlas line as filtering. So if you're only going to take long trades, it's because the price is trading and indicating above the Atlas line, and all the Atlas line signals are long. Anything above the Atlas line, the rule is we're going to focus on long trades. Anything below the Atlas line focuses on short trades. So you're only going to see long trades until the market crosses back below. So that's how the Atlas line works. It'll give you signals based on whether price is trading above or price is trading below. So it has nothing to do with the trade scalper. If you want to use it as a filter, some traders do. Fantastic. Only take long trades. And again, if this changes to the short side, which it may, then you focus on short trades when it comes to scalping. But you don't have to do it that way. But that's what a lot of traders do. So that's the Atlas line for today so far. All right, good. Good, very good. Let me just push this out of the way. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.